Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday the 7th of December 2020. The time is pretty much 0500 in the morning GMT, Asian session coming to a close, European session opening up, and our lunchtime is the American US session. So there's a lot going on today, so let's crack into it. So the last trading day, which was Friday, Friday the 4th, looked like this in terms of flows. So yen euro on the negative, pound dollar on the positive side, and the figures were plus 71 for the dollar, plus 19 for the pound, minus 21 for the euro, and minus 70 for the yen. So this was Friday, what was it, Friday the 4th of the 12th. So we just had a positive opposed driver in the dollar, a positive rock in the pound, negative mover in the euro, and a negative secondary driver in the yen, and the activity level was plus or minus 90. Right. Yeah, 90, 91. Okay, right. So let's look at. So that was Friday, the last trading day, which fed into the last week. So the weekly figures were as follows. Let's have a look. So let's turn the page. Right. The weekly figures were yen dollar on the negative, yen dollar on the negative, pound euro on the positive, and the figures were plus 394 for the euro, plus 167 for the pound, minus 257 for the dollar, and minus 304 for the yen. So that was weekly, which was last week. So it was Monday the 30th of the 11th to Friday the 4th of the 12th. Right, so we had a positive opposed driver in the euro. It was opposed by the pound, which was the positive rock. We had a negative mover in the dollar and a negative secondary driver in the yen, and we had plus or minus, or was it 561 for activity. Now, the final bit we need to look at before we can analyse what's going on is today's flows so far today. So what have we got? We've got dollar euro on the negative, pound yen on the positive, plus 23 on the yen, plus 16 on the pound, minus 15 on the euro, and minus 24 on the dollar. So this is Monday today, Monday the 7th of the 12th to about 20 minutes, half an hour ago. So we've just got a negative driver. It's opposed in the dollar. We've got a negative rock in the euro, a positive mover in the pound, and a positive secondary driver in the yen, with activity of plus or minus 39. Right, so that's let's make some sense of that, and as I say, we've got a lot to get through, so let's get cracking then. So Friday then, last trading day, full trading day of the week, we had an opposed positive driver in the dollar. So flows were, and it was only just, so the action was really in the dollar and the yen to a certain degree, and then the opposing flows were coming out of the yen and out of the euro to a certain degree, and the pound was the positive rock. Now over last week, so as a whole, we had euro strength as the opposed positive driver, with the opposing negative flows coming out of the yen and the dollar, predominantly out of the yen. Remember, we had a pretty solid week on equities, so that was a lot of that was yen transmission, and then we got the positive rock again for the pound. So the pound was attracting secondary flows predominantly, and it was getting knocked about by Brexit, but it ended up as the positive rock. So far today then, Monday, on a short sample admittedly from the start of the opening, we've got just dollar weakness as the opposed negative driver. So dollar weakness driving positive flows into the yen and into the pound, with the euro being the negative rock. So what are the key aspects of what's going to knock everything around this week? Well, we've got a very busy economic calendar, but really you don't need to get involved into the individual details. The highlights of it really for us are the US Congress are basically going to cobble together some sort of short-term spending bill, so that's going to put a little bit of pressure on the dollar to the downside. UK, we're all rushing back to the shops here in the UK apparently, so we've got this window of expenditure, and we've had pent-up expenditure from being cooped up and furloughed, etc. So we could get quite a strong short-term spending boost, which you'd expect anyway at this time of year, coming into the Christmas period. Right, what else have we got? The so-called level playing field problems on the Brexit negotiations. The EU is starting to make noises that they're going to bend a little bit, but who knows? So that's mildly Brexit positive. Now on the actual data front, we've got Wednesday, we've got CAD rates decision, and Thursday we've got EUR, more importantly for us, EUR rates decision. Now, and the gaps in the economic calendar, remember the gaps are often more important than what's actually going on, depending on what you're trading. We've got gaps really, we've got light data in the AUD and the New Zealand dollar. Now, interestingly, China has shown a trade surplus. Now, China, as we know, is a major user of raw materials, so there's been sort of a deficit on their imports. So at some stage they're going to need to suck in quite a lot of imports in raw materials if they're going to carry on punching out their goods, which inevitably they will. So excuse me, that's a whistle-stop tour of where we are in terms of how we're going to get knocked about. Let's put it into context. Right, so here we go then. Let's clear the decks, get off the fence, nail our colours to the mast, etc. Right. Right, so the other point just to mention, well no, I won't talk about that now. Let's get into this. Right, so Friday we had dollar strength, which was feeding into yen weakness. euro starting to weaken as the negative mover, which was interesting, and the pound just being pretty solid, getting knocked about up and down with Brexit headlines. So then, and over the week, the euro was the opposed driver. So the euro was very high over the week, and on Friday it was starting to show signs of weakness. We suggested to go short euro dollar at that point. So on Friday, now the yen was weak. Now the stimulus bill will obviously. So if you look at the dollar. Had they not passed this short-term spending, what is it, a spending bill in the US, then the dollar would have been on the up a little bit. We think the dollar is going to be neutral to slightly weak going forward. Now the interesting thing on the euro with the rates decision on Thursday, which what day is that? The 10th. So you got on the 10th of this week the rates decision, and the euro has been pumped very high, particularly the euro dollar. We think the euro is particularly with this scenario of rates decision on Thursday, Brexit noise starting to sort of negatively impact the euro and positively impact the pound. So we think the euro is headed downwards, and it's been pumped. So pumped last week. So the likelihood is we're going to see euro complex weakness. Now the yen again, the stimulus package. Spending, I keep calling it stimulus package, but it's actually a spending bill. But at the end of the day, US equities are very high. They've just been a little bit softer this morning, but we reckon that US equities are going to go up again. So be bullish. So the yen's we're going to say is a neutral to up. So sorry, they're down on the transmission. So the yen's going to be neutral to softer off the back of this equity transmission again, and that leaves us with the pound. Now the pound's going to obviously be very volatile, but we think the pound's basically on the up. So what are you left with? So you've got a neutral to soft dollar, euro coming off. Yen neutral to weak off the back of equity transmissions, and the pound is, we believe, is going to be the main recipient of the positive flows. Now that said, the interesting thing here is that after weekly euro strength during last week, Friday we started to see the euro as the negative mover, and we particularly saw very nicely a peak in the euro dollar. So we think the place to do it is to stay short euro dollar. So that would be our major pair of interest today, given that scenario of what we're saying. Obviously things can be knocked about by headlines and all sorts of other things, but given what we know, we would suggest, and of particular interest is staying short the euro dollar. Thank you very much.